Hi, everyone. Welcome to the best webinar on the net, free or paid. What a value. How you doing, Alexander, Ren, Hugo, Shahab, Scott? How are you, brother? Didier, how are you? Okay, so, I'm looking for a place to buy the dollar. You don't have my screen? Okay, thank you very much. Okay, everything's good now. Good, James. So I'm thinking there's one more, sell off that we're just flagging here. See this RSI on the 2-hour? That's usually not indicative of a bottom. I do think one more low we will diverge, but I'm thinking 92.60. There's a couple fibs down here, 92.88, and then 92.37. So just giving it a shot. If you wanted to go with individual currency, euro is not as weak as pound. I don't think this is over to me. I think we're going to make another push up here in euro. And actually, I still think we're going to make another push in the pound up to, the 61.8 level or so. So I don't like the, I just think there's one more low left in the Dixie. I am looking to get long down there. So just a, scalp, I'm not looking for a lot, 40 points in the dollar, maybe 60, 70 in euro and pound. And God, what a Columbus Day. Can you believe the blow off we had and everything? Look at this. So we have a throw over in S&Ps. Okay, so it blew through the line on Columbus Day. What a blow off. Look at this, 88.6 retrace. So I still haven't done anything yet, and this is why. I mean, the only place I could find any kind of non-confirmation, and I can't even find it on the 15-minute. So, it's got to do some work or I'll miss it. The other way to approach is wait for it just to get back inside of this channel line, about 35.20 or so. But I do think that we're close. And really, the stop is easy. It's all-time highs, right? Get out of the way at all-time highs, but I just didn't do anything about it yet because of my RSI rules. And just a quick look at some of the internals in NASDAQ, and NASDAQ as well is at 88.6. And look, just this momentum's too much for me to want to fade it. But look at some of the internals, don't look as great. And what by internals, I mean issues that comprise the NASDAQ 100. So Apple had a big day yesterday, right? 61.8. Okay. Didn't really get rejected off that. Microsoft 78.6. Didn't quite get there. Google did have a little rejection, didn't quite get to 61.8. And this was one of the weaker issues. And I think I have one more. I think I have, Amazon was the king. It's not far from making new highs, but I look at this on the daily at new highs, it's not going to confirm. And a quick look at, here you go, Punim book. Punim is a Yiddish word for face. So Punim book, 61.8 almost, and got rejected. NASDAQ's very strong again this morning. I believe there's an options expiration this Friday, and I'm hearing it's the it's the same situation with all these short-term options being bought, 2-week options, and brings in market makers that have to buy the stock. So it's one of these option phenomena that's happening again. And I think that's about all I want to cover. I'm still thinking that gold can make it up to, I was looking at this, maybe around 1945, where you'd have equality. Say you had this wave, did this, and then from here could take you up to the 1945 level. And silver, back to the relative weakness, I thought we had a chance to get to 26. I don't know if we will or not. Still could. I mean, all it's going to take is if the dollar breaks to new lows, they should come into the metals again. So those are my looks. Okay, Jess. Okay. All right. So ping me on Twitter and we'll talk about you being able to share that. So I've never done it. Well, I can't say I've never done it. I've spread off a loss, and I think it takes a certain amount of skill, because then you have to decide which leg you're going to lift when. So anyway, I'm going to bring Blake in here now so he could get back to trading and do the bias chart. How you doing today, Blaker? How's your microphone? I could keep talking about some markets.
Trying to find the, hold on. The cable is under a little bit of pressure here. Hold on. There's
Sure. Go ahead, focus. I'll talk about a few things.
Yeah. Just,
Go ahead.
Yep. Give me 1 second here.
Okay. So EG is going to come out of here with the weakness in cable. Maybe this was it in cable up here.
We had Hey, good morning. We had we had the headline.
I'm looking for headlines right now.
Ireland's Coveney says he doesn't see any major breakthrough this week. So
say what?
Doesn't see any major breakthrough this week in.
Oh, got it. Okay.
In Brexit, yeah.
Yeah.
Just now.
I mean that's what they say, and we'll see.
Stalled right at the 50% fib level.
What's that?
Stalled right at the 50% fib level. I thought we'd go 61.8, but I still think we can.
Yeah.
Cable.
We'll see. We'll see if that made it. The cable's pulled back, and it's pulled back right to the 130 level, which is obviously pretty important support for the sterling.
Yeah, that was that kind of breakout.
Yeah, it is. It's the breakout point. So we'll see if it can hold. But of course, this happens as soon as I'm trying to I want to trade. So you know what I mean?
Yeah.
But of course, it happens as soon as I'm about ready to speak. Of course, just let me put in stops and stuff. So
okay.
So what's up, Dale?
So EG took out this stop, guys, right here from September 28th and turned. And one of the reasons why, I didn't want to buy it was because of the confirmed low down there. But as you can see, we held 30. It's a mess. I mean, when you look at it, but if it's a consolidation pattern after this big move up, it's not unusual in a corrective pattern for it to be a mess. I still think Stell's going to get his 92. And then he could scale in again at 94 and 95. Which I've done. And anyone who's laughing, they've done it too. So let's see. Oil had a little bit of a dip here. It was really one of the only things down yesterday. I remember Steve talking about the potential for 41, 42. I can't really get a read on this. I thought it almost looks like you could have a little head and shoulders top going on here. And you know, even with what the pound's doing, you know, I'm short from 20. I still think we'll get one more low here. And you see why, you know, a teaching tool here was when I said if you want to fade the dollar, you know, that you didn't get hurt shorting the euro because the euro was the preferred long based upon that it was only down about 27 and the cable is already down 35.40. So those are the days when you have an up day in the dollar, down day in euro and cable. If euro's not as weak as a pound, it's you know, that's the kind of day you could buy it, try the long side. And the converse is true. If the pound is stronger than the euro, that's not a good time to try and bottom pick the euro. It's a better time to sell the euro. So just pay attention. If you don't trade EG, you got to pay attention for your preferred longs and shorts between them,
All
because
right.
it's
Oh,
okay.
no, go ahead. Go ahead.
No, anyway, because you know that's the difference between many times getting stopped out. If you diagnose the relative strength, it's going to be more forgiving. This was a perfect example. We just had a little pop in the dollar and you didn't take hardly any heat drawdown. But if you had chosen the pound to fade the dollar this morning, you'd already have a 20 pip drawdown or so. So anyway, just it's very important trade selection. Okay.
All
Go
right.
ahead.
Thanks, Dale. Yeah. So you know, people are, you know, have been buying the sterling based on, you know, hopes that that you know some progress is going to be made, you know, with Brexit this week, and so those hopes seem to be dashed a little bit, as some comments have come out saying that there hasn't been a whole lot of progress. So the sterling actually has pulled back a little bit, and we're pulling back to that support zone. And I'm going to go ahead and just write this down, since we're here right now. The lower end of the support zone comes in at 129.80. So just in case we dip to 129.80, I think you got to use that as an opportunity to play the bounce. If you believe that Brexit's going to eventually get done, if you're in the camp that you're thinking, hey, this it's going to all fall apart at the seams, and I'm just waiting to short the sterling, well, then you might want to wait till we break back below that support, right? Until then, I think it's, you know, near term bullish. The 50% is holding at 130.80. So I'm going to go ahead and write that down. Okay. And we're going to continue on. I'm just going to be moving here because of the time that we have, or lack thereof. So the euro, you know, I'm going to make note of the euro dollar, something that is important that that the ForexAnalytix crowd just got a little while ago, but I'm going to make the point here because it's been slow. There hasn't been a whole lot of updates in currencies overnight because it's been pretty slow night. You know, now things are moving just a little bit, but I think the market walked away from this weekend pretty bearish. The dollar, euro was at 118. Everybody's thinking, oh, you know, here we go, euro's going to hit new highs. You know, everybody's trying to make the case for a weaker dollar, and here we are. The euro's approaching, you know, ascending wedge support, or wedge support, trendline support, whatever you want to call it. I just think that we're at pretty key support. If you are a dollar bear and you think the euro dollar is going to, you know, 122 like tomorrow, you're probably looking at the euro right now going, man, you know, it's going to do this to me again. You know, where you have to start thinking, where are their stops? And that's what I'm thinking right now. So I'm starting to look at where I would consider support with the euro. I'd say this whole area, this is support down here. You can see these spike lows, and that all comes in right around 117.35. And I'm going to go ahead and draw out a fib just so you guys can have an idea where here's a 38% retracement. It comes in at 117.50. I'm going to write down, since that's pretty close, 117.50 is support. We drop below that, and you got to be a little careful. Okay. All right. I am going to keep us in range. As we were, yesterday we talked a lot about, just being in more of a range environment right now. And I think that's the case against a lot of currencies. Currently, resistance for the euro dollar, if we can get up to 118.55, because it's 57 here at the 618. So if we can get up to 118.55, I think that's going to be a great level of resistance. But again, it's if we can get up there or not. The Aussie. I do think the Aussie is bearish. Now, there was a story that came out last night, and this kind of went under the radar. So I'm going to go ahead and read to you some of the story from last night. Where is that story? Was it a text to me? Hold on. Oh, no, that's not it. Oh, here it is. Okay. This is something that I think has kind of got on the radar. And here's the headline. And this is from the Sydney Morning Herald. Okay. So the headline was Chinese companies given verbal notice to stop importing Australian coal. I don't need to read the rest of it. I think you can get the gist of what I'm trying to say here. I'm a little worried that the Aussie dollar might start underperforming, and it's something that we have to pay attention to. And technically, we know that that we're outside of this channel that we had been following so nicely. We do know that 70.30 is major support, which we're not anywhere close right now. We know. Well, as of yesterday, it was 72 cents. We actually broke above that, and we probably stopped out everybody that was short yesterday. Or no, I'm sorry. This is on Friday, but we should probably note that this little breakout here might have done the trick. So I think 72 cents and 71 cents is support, but we're getting close to 72 cents again, which I think will offer resistance. And I do believe that the Aussie dollar is bearish while we're below that channel. 71 cents is support, but yeah, I don't know. I don't know if I'd be, I'd try to lean on the bullish side of the Aussie. And one of the other things about the Aussie, just so you guys, I'm sure you guys noticed, is stocks rallied substantially yesterday.
Oh my God.
They squeezed.
Yeah.
Columbus
it's like,
Day. Yeah. It squeezed like out of Columbus Day. You're going, what the hell? And
yeah.
But
and the volume wasn't heavy.
No.
It was like a seller strike.
Yeah, that's it. That's all it was, I think, in my opinion. But anyway, we just have to realize that the Aussie didn't really participate in that.
Good point.
Yeah. So, and here's the Kiwi, right up against, again, key resistance. And you see that spike low, it's holding as highs. I'm going to write down 66.75, 66.80 is good resistance. Somewhere around there. I still think the Kiwi's bearish, actually. While we still have this double top in play, and I think while we're below, pretty much the 618, still bearish. But today support should be back down at 66.15. I think we wrote this down yesterday, so I'll just right down again today. So 66.15. Dollar Canadian. What I'm hoping for in the dollar Canadian, I picked up some yesterday, and I own some like 10 pips away from where we're at, or actually 6 or 7 pips away from where we're at. I'm really hoping we dip to the 78% retracement. You see this divergent relative strength here?
Yeah.
Yeah, I'm kind of hoping that we dip down to 130.85. If we can get down there, I'd add that support. I think we're in a range environment, but it is trading heavy, I have to admit. And resistance right now is at 131.50. Okay. Moving on down, dollar Mex. I picked up dollar Mexican peso yesterday at 21.21. I sold it last night at 21.31, and I wouldn't mind buying it again. You know, somewhere down there, you know, if I could get it, you know, maybe just a new fresh low. The 88% retracing comes in at 21.04. I'll write that down as support. Resistance is 21.50. I think we wrote that down yesterday. Cruising on down, dollar Swiss. You know, not a lot's happening here. Resistance is going to be, see this downsloping trend line here?
Yeah.
Yeah, and that's going to intersect with that previous support. So that's all going to come in at 91. Let's just call it 91.40. So that should contain the bulls for right now. So I'm going to put that as a kind of a important resistance.
USD Swiss and USD CAD kind of look similar.
Yeah,
a little bit, you know
a
this.
little, yeah. I mean, it's definitely a dollar move, I think, at this moment. Support is going to be down here. And you can see all the support down here. Yeah, it's a 78% retracement at 90.60. Nothing too exciting with the Swissy. I might start looking at buying it soon. It depends how. I mean, yields are down today, but if yields continue to build some strength, I might start looking to pick up some dollar Swiss soon. Speaking of yields, let's go take a look at the dollar yen. Now, the dollar yen was down yesterday as stocks were weaker, and that didn't really surprise me. And the dollar yen, you know, I can't get bullish the dollar yen while we're below this blue trend line, which basically comes in at 106, you know, 106.10. But right now, the 38% retracement is holding. So I'm going to call that 105.20. Whoops. 20, and then resistance 106.20, and that's going to be significant. I'm just going to, that's why I put an asterisk there, because it is significant. Let's go to dollar index. Dollar index. You notice, Dale, a lot of these charts look exactly the same. Like here's the, remember we were talking about that downtrend line, Swissy. Same thing with the dollar index. Same thing, you know, previous support that should act as current resistance. Downtrend line right here. There's your set. Well, we were looking at 7.8%. Here is a 618.
Yeah.
So, yeah, I mean, it's all the same chart basically. 93.35 is resistance. So I'm going to put an asterisk there. 93.35. We are range bound. There is an asterisk. That means it's important if we break. So what I would do right now is I'll just set an alarm just in case we break this resistance here. I want to be notified. Support 92.75. Okay, and let's go to the US dollar Norwegian krona. Again, same chart, right? Exact same chart. Channel resistance intersects with this previous support. I'm going to actually write down 920. Well, you know, if the dollar breaks out, it's going to be breaking out against a lot of different things. That's the good news.
Yeah.
Bad news is I don't know if it's going to break out, right, Dale?
You know, I think there's a 50% chance we don't take out the Dixie 91.77 and we put in a higher low and have one more bear market rally before the big decline.
Okay. All right.
That's
well,
what, you know, it's a guess, you know.
Yeah, of course.
Where I'm a professional guesser.
All right, let's take a look at the S&P. So yeah, this rally, I mean, look at this crap. I mean, this is so ridiculous. No volume. Look at the NASDAQ. I mean, it's just like
88.
Huh?
88.6 on both of them.
Yeah,
NAS and S&P.
It's nuts. I mean, anyway. So what we should do is identify the highs here, which will be
all-time high. Yeah.
Yeah, I mean, because remember, this is a megaphone pattern, and we kind of overshot the megaphone pattern, but I think it could come right back into play again. So that's 35.90. 35.90. So silly. I guess we had, you know, I guess we had to put bullish, but I'm just, I don't know. I'm going to keep it at range. Support is going to be down here. You can see all of this support right through here.
Yeah.
Right. That's going to come in at
34.
34.30.
Okay.
So ridiculous that we got to look all the way down there, but it is it. That's it. Gold. Gold didn't do anything yesterday.
Yeah.
You would have thought gold would have rallied, but it didn't. Hold on really quick, Dale. Excuse me 1 second.
Go ahead.
Done.
Okay. I just I picked up some additional pound Aussie down at 181.05. I just sold it at 181.20. If you guys are just so you guys know, if you're ForexAnalytix subscribers and you were in the chat rooms the last couple of days, you knew I had bought the pound Aussie down here. I was long down at the 180 level. I've been playing it to the long side, thinking that we're going to eventually break out post Brexit. Well, with all these negotiations, I think we're going out. Anyway, I sold some yesterday up at 30. I think it's 30. Anyway, I bought a little bit on this dip, and then I just sold it out again because of, all these headlines that were coming out earlier. I was also short the Euro Sterling on Friday after this reversal candle here, that outside day. Closed a lot of it yesterday on this dip down here. I was selling a little bit into that rally at 90.60. And then also I'm long some pound yen. Sold it yesterday. I sold most of it yesterday, actually, up at 62. So I'm still playing this inverted head and shoulder pattern. I kind of took some off, and then I'm thinking about adding back on here a little bit. But it's tough when I think that stocks are going to roll over. It's tough for me to lay into it. So I haven't done so yet. So just if you guys are part of the ForexAnalytix community, this is our chat room. This is us in the chat room all day long, and that they've been chatting since I've been broadcasting. But you can see Amanda's in there, and this is like my last message was, this is pre-webinar. And so this is where I'm at throughout the course of the day. So if you want to kind of know what I'm doing most of the time, then you got to be a ForexAnalytix subscriber. It's right here. When you're logged in, you just go right over here. Okay, I got to finish up gold. Sorry, guys.
Is that
Do we have
Steven
data?
Stelios up there?
Still, what?
We have
Where?
CPI, US CPI in a few seconds.
Oh shoot. Hey, how about How about a little warning, man?
Hey, I gave you 5 seconds, man.
There it is.
Okay,
It's
let's
out.
see.
Holy cow. Wow.
It's
What
out.
the fudge?
Who
sickle
won,
is going
Data
on over
Flash
here?
or Bloomberg?
I didn't get a chance to look.
Oh,
I'm
I like
It's
that
not out
horse
yet.
race.
I don't see it out yet.
IMFC's 2020 world GDP shrinking
There
to
you go. There's a CPI.
4.4%. Some of the CPI data is coming out. CPI a little worse than
In-
expected.
Yeah.
Wow. It's not good. Here's the CPI came in a little weaker.
Not what the Fed wants.
1.4%. All the rest of the CPI, just the core CPI came in a little weaker than expected. Dollar yen didn't do much. Let's see if the euro dollar did anything. Euro dollar is firming. just a
Coming out
bit.
of here.
Yeah. So overall,
Big fat zero.
but I guess the dollar's responding a little weaker due to that, but let's finish up gold and then I'll let you guys take over. Where am I? Gold. Gold. Where's my gold? Where's your gold, Stelios? Oh, there it is.
I will never tell you.
But I will tell you where his gold is.
You will?
Yeah, for the
Please
right
do.
price, of course.
Please do tell.
Just fly over
Everybody.
with your metal detector, Blake. You don't need them to tell you. When you go
All
over
right,
for
so-
dinner, you go, I'm going to the bathroom. You take your metal detector. They'll
Right,
find it.
there you go. That's because it'll be
That's
very
my plan anyway.
inconspicuous when you walk into Stelios's house with a metal detector.
Yeah, no one. Who would
no one
know?
Nobody
know-
will figure
no
out
one
what the
will see
plan
you
is.
coming.
Yeah.
No one will see you coming.
Say it's your cane or something, anyway. Oh, that would work for me.
9140 continues to be resistance. Hold on, I'm sorry. 1940 continues to
Nobody
be
will
resistance.
know.
Yeah, nobody will see.
Yes.
Support, I think, will be 19.
You just sit down at the table with it next to you. That's all.
So, guys, here's where I think we're dealing with gold is real simple. Is going to be right here and right here. So basically, 1940 resistance, 1938 actually, but I just and this 1901. So it's basically 1900. I mean, we're just kind of range bound right now. All right, guys. Here's your super exciting, can't live without it bias chart. I'm being sarcastic because the market's not really doing a whole lot right now, but yeah, that's it. What'd you guys make of yesterday's rip higher in the markets when no one else is looking kind of move?
Good question.
Will I be a prick if I said that wasn't a surprise for me?
Did you say, will I be a prick?
Yeah.
That a
Yes.
rhetorical question?
Yeah, yes, you will be. Yes.
Okay.
Go
I think
ahead.
I've been warning for weeks that this is not the period to go both against the Fed and the government.
Yeah.
So, yeah, no surprise there. I believe they're going to do the utmost for the elections to happen at all-time highs.
Well, we might get there. We'll get there today. We'll see. We'll see.
Yeah, I mean, it could be.
We could be based on yesterday's move. Anyway, hey guys, I'm gonna let you take over, but I want to say something. We've been trying to reach out to the winners of the ForexAnalytix giveaway. We got a hold of one of the four.
Two already.
Two. Okay,
Yeah.
thank you. We've gotten a hold of two of the four. So there's two of you out there that actually won, and we're contacting you via Twitter. So, be on the lookout, guys, for your Twitter handles. For those of you that are trying to figure out who the hell won, because two of you have not responded, and if you don't respond by the end of this week, we're gonna have to give your stuff away. Sorry, to somebody else who's more deserving.
We will just
kidding.
roll again.
It was a random
somebody,
giveaway. But
if somebody doesn't show up, we'll just do another roll.
Yeah. Anyway, all right, guys. Hey, have a great one. Steve, Stelios, it's all yours. I'm going to pass it over to you.
Thank you,
Thanks,
Blake.
guys.
Thank you.
Thank you,
Yeah,
mate.
you guys have a
See
great
you,
one.
Blake.
Bye, guys.
Bye.
Good luck
And
today.
Oh,
and
we have
today we have
the
Gregor
wizard.
joining
Yes,
Oh
us
we
my
do.
God.
shortly. Yes.
Yes. Good thing that he's joining because I don't have that much to say.
Okay, leave then. Bye.
But yeah, I mean, well, there are a couple of things. Apart from the US CPI, we had some data out of the UK, average earnings index, quite a bit better than expected, actually. And unemployment, so claimant count changed also quite a bit better than expected. So, you know, some green shoots out of the UK. And this is following up to PMIs, which were a little bit better than expected in the last couple of weeks. So, you know, overall, looking a little bit better, but obviously we have the big elephant in the room to be really should be decided by this week, but you know how politicians are, they might drag it to the end. But apart from that, the other thing which not too many people are talking about, which is a little bit, I find it a little bit strange, is that, you know, we've had all these rallies and hope on vaccines and all these potential vaccines. And there was news that one of the main ones, Johnson & Johnson one, they've halted the trials because apparently one of the participants fell ill. And this is, you know, this is standard procedure, but obviously the markets are really waiting from one day to the next to get the good news. So there's a lot of attention on these headlines, or at least there should be a lot of attention on these headlines. And this is following up to a similar case on, if I'm not mistaken, on the AstraZeneca vaccine. Hello, Steve's cat. And
That was a leaky, yes.
so this is you know, we get lots of nice rally when we get hopeful headlines, and then when we get bad headlines, we just go flat.
Yeah, the market
sideways.
doesn't care about negative headlines, but for every positive headline, you know, we'll rally at least 1%.
Yes, but apart from that, really, this week is all about the. There's more talks between the UK and the EU for Brexit, and there's going to be a lot of headlines flying around. But let's see if we can manage to get something done or firm this week. Now we're going to get Gregor in a minute. I think he's probably ready to join, but I don't have that much else to say, Steve. So maybe you can have a look at something, whatever you want to look.
Absolutely. So just make sure that Gregor, you know, remembers that he has to use the new link that I sent him.
Yes.
Okay. So let's begin by saying that the S&P is at the 88.6% fib, extremely overextended in the very short term. There you go. You can even see the overshoot we had in this ascending channel. I think that that's a Nasdaq actually, but it's very similar. Here it is, the S&P. So we are in the S&P. We are within this channel. We're at the 88.6. You know, I think that 3480 something is going to be support from this point on. So you know, any dip there whenever we see it. And most probably bulls are going to step in and drive this to the previous all-time highs, the ones we saw roughly a month ago, like 4 weeks ago, 20th of September, until something different happens, which you know, kind of doubt. There's not much to talk about. There is a little bit of a divergence today. The past few days actually having to do with the VIX. So the VIX the past couple of days has not followed the indices higher. But we've seen even in the recent past that this type of a divergence can go on for many days before it actually plays out. So at some point there's going to be a flash lower. There's no question about it. Having said that, I think it's going to be very short-lived. By the way, here's Gregor. Hey, Gregor.
Hey, mate.
How have you been?
I'm fine, and you?
Good. We've been keeping track of the S&P that's flying after breaking through this pennant. I'm assuming all-time highs quite soon. I think we are in wave 3 of this leg. What do you think?
Yes, I think that new all-time highs could be coming, but still, we should be aware of the near-term corrective setbacks. Also, if we look at the German DAX, you will see that there
Why don't you grab the screen?
is
Yeah.
a very big
Hi, Wizard.
Hey, mate. So you're already back.
Yeah, I'm back. Steve, I'm back.
Michael Jackson.
Please.
Oh.
You know how it's bedtime at the Jackson household when the big hand's on the little hand.
Oh my God. Oh my. They're gonna totally shut us down.
Well, you use the P word, so I'm just trying to clean it up here. All right, there we go.
Okay.
There we go indeed.
Yeah.
As you know, we've been looking for this pullback from all-time highs to be a free wave movement, a corrective drop. And the reason why we were looking for a reversal back then is because of this wedge, also seen as an ending diagonal here in wave C of this pullback. And so far we have a very nice evidences that the new impulsive bullish structure is underway. As you know, wave 3 is typically the strongest wave. And if we will compare the current rise here from end of September or start of October, you can actually see that move is very sharp and already longer than the first leg. So I think that this can be wave 3 in progress, meaning more upside after near-term setback. Now, if we see a pullback, I would watch out this gap here down from October 09. Okay, but generally speaking, I think that any retracement will be just temporary on the way up. Also,
up and up.
What?
Up and up.
Yes,
Yeah.
and no
That's
down.
the S&P. These are the indexes.
Stocks always go down, up. Yes.
Yeah, Portnoy.
Yeah.
Stocks only go up.
Yeah. And this is not actually only the case on the S&P 500. As you know, we are moving in this consolidation on DAX for a very long time now. And you can imagine where S&P 500 could go if this consolidation will also be completed in the next few weeks. I'm looking here for a triangle to be in a wave 4. So I'm expecting maybe another wave E pullback, and this one could not be underway.
Wait,
here.
so you expect that leg higher in the DAX to be the final one? What's the bigger structure there, Gregor?
The bigger structure, here, you are going to see a wave 5 to the upside. But let's not be going too far into the future, okay?
Yeah,
you know,
okay.
Yeah, I mean, I just always like to predict one wave at a time. And even if this wave 5 could be maybe final leg of a higher degree wave 1, who knows? But the idea is that currently we are consolidating here, and that I'm expecting more upside after this wave E pullback. Also, there are other European stocks indexes that suggest the same. We are in consolidation. I think I have this one here.
I was showing FTSE yesterday. FTSE is in a really prolonged consolidation.
Let me just, here's Eurostoxx 50 index, a daily chart. I mean, very clear pattern. We have 5 waves up here, followed by a 3-wave setback. The first support here was at the former wave 4, from where we are already seeing some nice recovery. So maybe some pullbacks in the near future, as I said, but eventually I'm expecting more upside. Also, looking in this context of a risk on, I mean, dollar index is also reversing perfectly from this resistance zone here that I highlighted a few weeks back. And now we are down out of this upward channel here on the 4-hour chart. So free wave recovery appears completed. More weakness is in the cards, maybe even some kind of a bearish head and shoulders could be forming here if we found the support here at 92.70 area. So don't be surprised by a rise in the near term, maybe for some just temporary rally before we see more weakness. Also, I would be looking for stronger commodity currencies. I mean, if we take a look on dollar CAD, this one appears to be turning very nicely here down for a wave 5. So finally, I'm looking for a drop below, actually to a new low of 2020. Okay, it was at 1.2956. So I'm expecting actually that these levels will be taken out. I'm just worried a little bit because of crude oil. I see crude oil still in this wave B position. Okay, so meaning that if crude oil will see more downside, maybe this dollar CAD can slow down for some correction in the near term before we resume to the down to even lower prices. But generally speaking, I think the trend is clear, is very clear here. So if we take a look on crude oil,
that was a great call by you, Gregor, because you were talking 130 even after that, you know, everyone was looking at 32.5 breakout level, and we headed up, but you saw new lows coming. That was, you know, kept me out of trouble. Thank you.
Great, nice to hear that. So regarding crude oil, maybe that's the only thing that worries me about potential risk on, but not on the longer term, just maybe short term. Okay, it's still ongoing consolidation here. I'm tracking an ABC setback either for a wave 2 or wave B. The ideal support would be around $34 down towards $30 per barrel. Also, maybe this slowdown on crude oil prices is probably due to potential second lockdown, and probably there are actually a lot of companies prepared much better than back in March. So no matter what happens, I doubt that crude oil will see any significant drop. And I think that any just lower prices could be actually opportunity to maybe to look for a reversal back to the upside. I'm expecting crude oil to be much higher in 2021. But hopefully we get this pullback. So we'll see how other markets will respond at the same time. Maybe stocks will just make even more complex consolidation. But the key is that on each market, we are tracking just pullbacks on the way up within this risk on sentiment. Now, also, if we take a look on gold, Dale, if there will be any questions, or Steve, please let me know.
Yeah, there are questions, but finish up your, you know.
Okay, now metals are definitely in uptrend. I'm expecting this pullback to be finished, if maybe not already did that back here at the end of September.
Yeah, that's my question as well, Greg. I'm a little bit torn. I'm not sure if we've already seen the low.
Yeah, you know, sometimes it can be very tricky to say where correction, if correction is finished, unless you see a very nice and aggressive 5-wave rise. But simply that's not the case here. So
yeah, I'm also keeping track of that channel. If I see like a parabolic move out of the channel, then I'll know it's over. But ideally, I hope there is one more low.
Yeah, I mean, it would definitely put a lot of frustrations on those who are already on the long side. So market would get rid of them if we see a little bit lower prices. And that would actually be the ideal scenario actually to market to turn higher if we see that this dip. But generally speaking, it's a wave 4. And I'm expecting more upside also if we take a look at silver here. Maybe this is also wave 4, or maybe higher degree wave B or wave 2 is already unfolding. So I would be looking for a higher degree correction if we see another drop towards 21. But generally speaking, it's a correction, I think, on the way down, on the way up. So better entries could be actually from lower prices if we get this pullback. But generally speaking, it's just a pause on the way up.
Yep, I couldn't agree more. I think silver is going to seriously explode higher during the next months / years. I think we're still at the very, very, very beginning of this
Maybe
explosive move
markets
higher.
will be now a little bit tricky because of US elections. And what I noticed, I have to finish my chart analysis on this one. What I noticed is that after US elections, there was, since year of 2000, there was always a good buying opportunity on stocks, but not just immediately after the US elections, but the next year, the following year. Okay, so I think that 2021 could be actually very interesting, especially if we see some pullbacks.
Yeah, what you're saying makes sense because historically, from historical data, the worst year for stocks is always the first year of a presidential cycle. So, yeah, I mean, this totally makes sense. And I also believe, I've said it in previous webinars, the market is now ignoring like a lot of the problems because governments and central banks are just papering over the problems with stimulus.
Yeah.
But at some point, the rate with which the economy is going to be stimulated will have to slow down, and it's going to be the point. And I think that's going to be at some point next year. It's going to be the point that the market's going to realize that the economy, despite COVID, I'm assuming by then having more or less been solved as a problem one way or the other, that the economy is not going to be back to where it was, despite all the stimulus, despite all the new debt piled up. So I think at that point, that realization is going to trigger quite a decent sell-off. So I agree. Yeah.
The question is what kind of a policy they can use after another potential shock.
I think inevitably UBI is coming, universal basic income. They're going to just be sending money to everybody for doing nothing. So that is definitely going to stimulate some of the broken economies, like many of the quote unquote developed economies, that their economic model is based on consumption. Of course, this is not an economic model. This is a disaster because consuming something means that somebody else has to produce it. So imagine if all economies turn to that model, then they're going to be buying what? Produced by whom? Yeah, one of the things that is coming is definitely that, and I also believe that what they'll end up doing is, as the BOJ start buying stocks as well, they're gonna find another way to just bypass that restriction as they've bypassed all other restrictions in the past. So I think that's what's coming like within the next few years.
Yeah, so maybe for investors, markets are definitely at extremely high level. So for a longer term perspective and for investment is definitely not an easy task maybe to look at stocks, but generally speaking, there can be some selective opportunities, especially when looking at commodities. So maybe there are still longer term opportunities out there.
Oh, for sure. And what you said before, Gregor, I think that's key. I mean, you said that, silver will be much higher. You said crude will be much higher. What I had to add to that is that anything that has intrinsic value will be much, much higher, denominated in, fiat currencies, especially US dollars. Yeah. So I think it's not only crude that's going to be moving higher, it's anything that has actually some intrinsic value. Metals, minerals, grains, more or less everything. Let's go through some of the questions and see if you can.
Let me look also on cable.
Yeah, cable actually is a good question because you know, we have all this uncertainty with cable. I mean, it's a binary event that's coming. So theoretically speaking, cable should either produce, you know, soon enough a sharp move higher or a sharp move lower, depending on how the Brexit negotiations go. Which of the two you think from a technical perspective?
Well, from a technical perspective,
Lower.
Yeah.
Yeah.
I mean, we just have to respect what the market has been doing. Maybe already priced in something
Yeah,
here.
I have the exact same channel that you have on the left on my
Yes,
chart.
from September highs, we are now retesting this same zone. So technically, it's a perfect reversal point at the moment. Also, perfect timing. So I just think that even good news could potentially spike just temporary here higher on cable before market comes lower. So we have seen such reaction several times in the past when even good news was not actually a good reaction on the market. So I would not be surprised by the opposite. And looking at the euro pound, there's also on this 4-hour chart, you can clearly see that there is
one more high, yeah?
Yes, there's no 5-way fall here, meaning that euro could do better against pound in this situation. So more upside here could also be equal to.
That's the one extra high that Stelios wants to sell.
Where from around what? 90?
Stelios is looking to sell, I think, around 93, 94 cents, if I remember right.
92. So he'll get it.
Yeah, so he will get it, yeah, because I'm right.
Maybe he'll raise it. Have him play Gregor's. Well, he could just look at Gregor's stuff at his fingertips on our website.
Gregor, what about the Aussie and the Kiwi and?
Yeah, I mean, Aussie dollar reversed very nicely here. Here from those supports, we've been talking about this last time. We are recovering now. When looking at the 4-hour chart here, we firstly recovered quite nicely, impulsively. We made this overlap. So this 3-wave setback was actually ideal for, even if just for a temporary opportunity here on the long side. Now, the question is what will happen in the next, let's say, 24 hours. I'm not really convinced what this current minor reversal means, because we haven't seen this broken trend line, which would be required to happen to lift prices higher into this wave 3. But if we go a little bit lower and break this lower trend line support here around and go towards 71.20 or so, then I think that there is a chance that actually we are in a complex correction here, meaning that another dip can be coming towards 0.7 level. So here in the short term, not really clear picture for the Aussie, but longer term, I still think that we go either up here from this wave 4, or let me check if, or after this deeper complex correction. But in either case, I think that this Aussie could do much better in the next few months.
Yeah, I agree. Kiwi looks very well bid as well. So,
and also looking at copper here, looks like that we completed correction. Maybe we are going to see here more upside in the near future. So this could definitely help.
You want to see another interesting chart? Open natural gas.
Natural gas.
And gas, if you're looking for a trading view.
Just a second. I have to stop share, right? Stop share.
Dale, do we have an interview today?
Yes, scheduled. I'm looking for Thomas in the
Thomas the Train.
Thomas Malinen. He's gonna be talking about
Malinen. Okay, that's a Finnish name.
Yeah, he's gonna be talking central banks. So you're right up your alley.
Okay, natural gas, right?
Mm-hmm. and gas. There you go.
Okay. So this appears to be very interesting, you mean?
Yeah, I think that natural gas as silver is just beginning a very long journey higher.
Yeah, I mean, I definitely would have to agree here. We've been also looking, let me just check if I have this one here. No, I don't have it here, I think. It was a long-term corrective setback of a 15 year.
Yeah, a huge bottoming pattern we've been creating there, yes.
Yes, I'm not sure where I have this chart right now, but I posted a few times on Twitter, and I think I also shared it here in a webinar in the past. And yes, I agree. I think that this natural gas could really see much more upside, but I would be willing to look for opportunities maybe after a correction.
So bottom line, food prices will go up, heating prices will go up, transport prices will go up, but central banks are worried about inflation being too low. Yeah, that's going to develop like, you know, nicely.
Yeah. We'll see how this all unfolds, and definitely there will be opportunities here on those markets after setbacks.
Let me promote. I found him, Dale. I just promoted him. Yeah.
Oh, beautiful.
It wasn't that hard.
Was it under his first name? Because I was searching.
Both his first and his last names.
Okay. You know me, Steve. Everything's hard. For me.
PG 17.
Oh yeah, I didn't. Yeah.
Okay.
Anyway,
I take your word for it.
All right. Anyway, just kidding. Actually, anyway.
Thank you, Gregor. Thank you, mate.
Gregor, thanks, buddy.
Thank you, guys.
Thomas, try using your microphone.
Can you hear me?
Yeah.
Yes, we can hear you.
Excellent, excellent. I had some problems with the Zoom, Joe, but I restarted it and yeah, okay, nice.
Everything's cool. So you want to share your screen, buddy?
Yeah, I actually, yeah. Just
that green.
Are you also a fan of?
Yeah. Can you see this?
Yes.
Yeah.
This is what I want to talk about today.
Okay, go ahead, Steve. You have a question for him if he's a fan of what?
Of fast driving.
Fast driving.
Yes.
With cars.
Yeah, of course.
Yeah, no, I don't know. It's a trading term, but yes, I'm a fan. Yeah.
Yeah, of course.
I
You're
like
Finnish.
especially American cars.
Seriously?
Yeah,
that's interesting.
Yeah.
Okay.
Which one? Name one.
Challenger.
Oh, okay.
I don't really know the actual year, which is my preference, but Dodge Challenger is my car.
Okay. They were a great muscle car in the 70s. I remember them.
Yeah.
They've been reinvented, retooled. So okay, you want to talk
Exploded
about the great
in '86?
Did they? The Chell? Oh, that one. Oh my God.
That one.
Oh yeah, the flying one. Yeah.
Yeah.
All right. So Thomas, the Great Stagnation.
Yeah, that's basically what I want to talk about. Well, in general, also, I think in current environment, the central banks receive way too little criticism. I don't know why that is. They're like some rock stars that are messing up our economy with, different substances or something like that. It's really strange. But I'm a trained growth economist. So this graph or figure tells me quite a bit where we are now. So this describes the global and regional growth of total factor productivity. And total factor productivity is essentially part of the GDP growth that we cannot explain with increases in labor and capital quality and quantity. So it's an unexplained part, which is usually considered to be a measure of how technological innovations are, or how we are able to include the technological innovations in the production. So it just says that if the TFP is growing, it states that the productivity of a worker is growing faster than it should, considering the labor and capital inputs. Essentially, that's the thing. And what it does is it naturally tends to fall in when there's a crisis. So if you look at from the 1990s on, there was the Soviet Union breakup, the financial crisis of the Nordics and the Japan, and all the global TFP, which is the black line here, was dropping. Yeah. Then there was the Asian crisis, the tech bubble, and then it grew quite steadily till the global financial crisis came, and then it recovered quite quickly in 2010, and then fell again to a declining trend. And this is something that should not happen. We have been in expansion, economic expansion, if you look at the GDP since 2009, but the total factor of productivity has not grown. And this is a big mystery, but it's our take that we are here because the very low interest rates set by the central banks and the QE have destroyed the mechanism that actually creates economic wealth, in a sense that the productivity growth is the one thing that has lifted the humanity out of the poverty during the past 250 years. And what this tells now is that this has broken down. And if you think about how the economy works, so you invest, you take risk, you either fail or get a gain, and if you get a gain, you get your business going, you hire people, and every time your productivity increases, you can you hire more skilled people or skill your workforce, and the wage grow and the economy grows, and you have the gains and capital gains which accumulate and start to seek for other opportunities to invest. And this is called the risk and reward model of the capitalist economy. And what happens if interest rates become too low? Interest rate is essentially the cost of time. Like we borrow from the future, although we get the loan from the banks, like they create the money right now, but we still borrow from our future incomes. And the interest rate reflects the uncertainty from here to the future income. And future is uncertain, so there's uncertainty. And this is something the interest rate should reflect.
And they're not. They're showing every loan is riskless.
And this is what it does, and it creates a kind of a situation where actually the loans or the investments that are not so profitable become profitable in a wrong sense, because you can get very cheap funding for them. And this creates, and this is behind the zombification we've been talking about. We've been hearing so a lot lately. At least everyone has heard about it because it's a big problem. So we have companies that should not survive. They cannot. The zombie company is defined as a company that cannot meet its debt obligations from its income stream. It just survives because it can get cheap funding from the banks and from the market. So it can get cheap debt. And this what happens is when the interest rates are really low, such companies multiply, and this is really troubling for the economy, because they tie capital. If these companies would fail, it would free the capital and the loans and all everything that is tied to them to be used to other companies which probably would have more profitable business models. And when interest rates go really low in the short and the long end, especially when they go that in the long end, you will start to create zombie companies from the very process that they can get cheap funding to sustain themselves. and it ties the capital. So it's kind of a double whammy in a sense to the growth engine of the economy. And this is something, this is a bit technical thing, but this is something that should be taught more, because if you think about if you have a, let's say you have a loan and you have an income stream, and you need to get more loan to get your like income stream growing, or you need, let's say you just keep accumulating debt, but your incomes doesn't grow. So at some point there's a big problem, because you know debt level goes up, your interest rate expenses go up, but your incomes do not grow. This is essentially what this graph tells you. So when the productivity of an economy does not grow, your ability to make profitable investments and acquire capital gains is hampered. But if we would have, I don't have it here, but if we would have the growth of US debt, private debt, for example, here at the same time, it would increase, while the ability the economy to pay the loan back or the debt back gets worse and worse, because the productivity growth has stagnated. And that creates a big problem for us, as you know, and this has been going for 8-9 years now. This is a big problem, because
when's the end game?
Well, the end game is a collapse.
Okay, let me just backtrack to our last interview, and you thought one of the triggers was going to be some type of vote in Europe. I think it was Italy, that was going to pressure the euro and be negative on the euro. What happened to that narrative?
It's still alive, but they have been able to kick the can again. So we had the recovery fund. We have a kind of preliminary agreement on that, but I'm rather skeptical whether it will go through in all the 27 member nations as it should to be ratified.
You're still dollar bullish then?
Yeah, dollar bullish. Yeah, for definitely, because the euro will get false sense of security or false sense of whatever, because of the idea that Europe will come together to kind of build a new level of debt above all the national debt, and then the debt would be now taken by the European Commission and the EU and distributed to the member nations. So this is the idea, that everything will be good when we add massive layers of debt into this, already big debt pile we have in Europe. And it just doesn't work. But what they have managed to do is, when the coronavirus hit, especially during the summer, Italy enabled moratoriums on bank loans and debt. So they will run from 6 months to 12 months. So the moratoriums will start to end at the beginning of January, and all the moratoriums will end by June. So that's our kind of that's our goal for when we think that between the January and June next year, the banking crisis of Europe will begin.
Okay.
And it will go global fast.
Okay, so and you think it's going to be a European bank that is the transmission mechanism for this?
Yeah,
what
because
country?
we have Italy or Spain, probably. So it can also be Deutsche, but I'm doubtful whether Germany will let the Deutsche fail. But the thing is that Italy and Spain just don't have the funds to support the banking sector.
Okay, how does China fit into your narrative?
Well, China is there on the background in a sense that they are extremely highly leveraged. It's probably the biggest debt bubble in the world, in the history of the world, actually. We have never seen such a massive credit expansion anywhere. But as they have a closed system and they run a totalitarian system where they can suppress all the bad news on the banks, for example, they can keep it running for a while, but they still are dependent on the exports and on the ability of the domestic consumer to keep on consuming and increasing debt. And those both are coming to head in China. They have at max 2 years, I think, when they are really able to run such a biased growth model.
Okay, so is your stance, are you a gold bull, and that's really the only place for people to be parking funds in this environment?
If you consider that if we will see a global Great Depression, as we have been warning for a year now, then the only place to hide will be gold, physical gold. Because if you think about every single financial asset class is in some kind of a bubble. So when it starts to unwind, I don't think any sector will be saved. And if we have a banking crisis like we see, then you will have a massive hit on the real economy too. So this means also that many tangible investments will lose a lot of their value.
Like real estate?
Real estate too. Like in the 1950s, the 1990s banking crisis in Finland, the real estate fell by 50%. And in Great Depression, it fell about the same in the US. So you can expect massive declines in all asset classes. But the gold is interesting in the sense that it has been going against the tide during deflationary crisis. Silver hasn't, but gold has. And the thing is that if we have a collapse in the monetary system, basically the only way to build it again is through gold. So we would have a gold-backed system again. And if you consider all the countries tying many countries tying their currencies into gold, I would say that we could see the gold price tenfold. But this is all speculation, we don't know. But we know for sure that when the crisis starts after the first year, in all historical examples we could find, the price of gold will started to rise. It multiplied within the next 2 to 3 years.
Okay. So, all right. Anything else that you wanted to cover with us? What do we do to change the policy or get rid of central banks? I mean, there are movements, and there have been movements for a while to get rid of the Fed. You think it'll ever happen?
I think when the crash occurs, especially if President Trump has a second term, he will blame the Fed. He has already laid the groundwork, and the proposals of laws of auditing the Fed. I think they passed the Congress or Senate already, but they didn't go to the second house. But it's just there is a high likelihood that it will come. There is a strong objection or opposition against the Fed in the U.S. You can see it raises its head time and time again. But if Joe Biden wins, it's a bit probably more difficult to participate or the forecast what will happen to the Fed. But I wouldn't be betting my money on that the Fed will be there after 10 years. They have just created such a massive mess. I never thought I would see the central bank of the US to nationalize most of the capital markets where it effectively did last spring. It was just nuts. They were in every single big corner of the capital market. It was insane. I understand the desperation, but you create massive imbalances and fragilities into the system with these bailouts. We shouldn't have, markets should not be bailed out. That's the thing.
Yeah, well, that it's been going on for a long time. Yeah. So I'm getting some responses from attendees about digital currency, and ECB is fast tracking digital euro now. What's your take on this?
Well, it's a desperate effort for the central banks to try to cement their power against the coming, collapse. And in general, it runs a risk also to the private cryptocurrencies. I think there was a story in Bloomberg about 2 days ago where some agency of the U.S. warned that the cryptos will create a danger for the national security of the U.S. And it's something that those investing in the crypto space should acknowledge, that governments may try to ban their use. and this is a big risk. So this is something that needs to be acknowledged. We don't know how the whole market of the cryptocurrencies will evolve during the crisis. Will there be enough liquidity to get out of them, and what will the governments do? So that's a big risk. Cryptos are the big risk in our books.
Okay, that's an interesting take on that. So anything else you wanted to cover here today, my trading warrior brother?
No, I think this was it. I apologize that this was a bit technical. The beginning. No, but this is something that people should really understand, and this is a big problem. The figure I'm showing here, this is a big major problem, which full implications have really not been understood in any corner of the financial media or financial space for that matter. So that was basically it. So I urge everyone to go and read our latest blog, which we explain even more about.
All right, you want to show your website and where people could read it and follow you, and because you provide things that people really have to think about and study.
That's what we plan to do or try to do. So it's a you can find it. So you can come on.
So Jeffrey Wetzel really enjoyed it. So you just do another screen share.
Yeah.
There we go. And
there we go. So this is our homepage now, and there are a lot.
I like that.
The black swans.
Yeah.
And there's a lot of free stuff. I urge everyone to read the stages of the collapse, where we kind of follow. It's a constantly updating blog where we follow the development of the crisis. We have different phases on it, and now we are between the stages. Now we're between the counterattack and the flood. And the flood is the flood of corporate bankruptcies. We expect it to increase quite heavily during the winter. So there's a lot of.
You were saying that that we were going to have that solvency problem. Starting in the fall and winter of this year.
Yeah, and that's what we have seen. If there was just in September, the U.S. commercial bankruptcies surpassed the 2019 level. So the whole year they surpassed the bankruptcies of the whole year of 2019 in September.
Okay.
So we are heading there, but the authorities and governments are trying to do everything to stop this, but it's such a massive hit.
How much time do you think the Fed bought us with what they're doing? 2 years?
No, a year at max, because they can't really. The thing is that the Fed cannot save the European banking system.
True.
And this is what we have been warning, that in all our U.S. customers, that you concentrate too much on the U.S. economy. You should watch really carefully what happens in Europe. Like if you consider the balance sheet of European banks is about 300% of GDP of European Union, and you have in the U.S. it's like 90%. So we have massive banks. They are global and they are fragile.
So their debt to cash ratio is 300%.
Their assets to GDP.
Oh, okay.
So it's 300%. So it's just a massive sector, compared to the U.S. banking.
Yeah.
Sector. That's what scares us all.
Yeah. Okay, well, there's plenty of things to scare us going into Halloween this October, huh?
For sure, yeah, a lot of things, and with the elections and all that. It's I think November will be interesting in many ways.
What will be interesting? The election?
November.
Oh yeah.
General.
What do you think? Before we go, what's going to be the major event? That it takes months to decide who's president? The courts decided
the uncertainty, and I don't know will there be unrest, whoever wins, and the lockdowns, and people are really tired of those in Europe too, so we could have unrest all over the world basically in November. So
I feel the vibe, Thomas.
Yeah,
because I'm restless.
Yep. Yep,
So
yep.
yeah, I'm sure everyone else is too. We have fatigue from, you know, the last 8 months. So I appreciate you being here with us today and sharing your stuff, and want to make sure that people can go to your website. It's www.gnseconomics.com, and you'll be able to read all of these for free. And you're a great resource for the big picture, Thomas.
Thank you. It's always nice to talk to you.
I appreciate that. So we'll do it again.
Yeah.
And appreciate it. That's a wrap for everyone. For me, don't just count your digital currencies, guys. Count your blessings, and stay safe and prepare for the storm.
Yep.
And no one knows when it's coming, but that's the art of it, is not the if, but the when.
Yep.
So we'll see you all tomorrow. Thanks again, Thomas. And
thanks.
I'll get a hold of you and we'll set something up down the road.
Yeah, thanks. We'll do that.
All right.
Yeah.
Okay, everyone.
Good luck to all.
All right. Thank you.
Thank you.
All right.
Okay. Talk to you.
Okay. Thomas makes black swans gray.
Yeah.
I love that line. All right. I'm gray. Thank you very much.
Okay. Thanks.
I'll
Bye-bye.
see you guys.
Bye.
Bye,
Yeah,
everyone.
bye.
Bye-bye.